So Dick's Sporting Goods is maintained at a buy according to Truist Securities. Another analyst stated they expect Dick's to gain from diverse assortment of national brands and rollout of new store concepts. And they recently came out with earnings, and those earnings were better than expected and beat margins and revenues and earnings. So scrolling out to the monthly chart, you know, we're talking about price at 211, and really the best levels to go long is 60 points below current levels. According to the monthly chart, price can pull back all the way to these levels because there are no really buy wicks in these two candles. Now let's see if right. So price momentum was so strong that price didn't even have an opportunity to move to pull back. And this would have been a beautiful setup had price pulled back. Price has also formed now another level of interest down at 180, and we're going to look at that a little closer on the daily chart. But before we do, let's look at this article. So Dick's rose this past week after the company reported better than expected fiscal Q4 earnings, revenue, and gross margins. For the fiscal Q4 2023, the sporting goods retailer reported earnings per share of $3.85, topping the consensus projection of $3.35. So they beat the consensus by 50 cents. The company's revenue also exceeded forecasts, reaching $3.88 billion against an anticipated $3.78 billion. So they beat consensus by $100,000. In addition, the company announced a 10% increase in its quarterly dividend, rising to $1.10 per share. This puts the annualized dividend on a $4.40 per share basis for the year. Here's what the CEO had to say. We're very pleased with our results and accomplishments in 2023 and are excited to continue to redefine the future of retail. We're guiding to another strong year in 2024. We plan to grow both our sales and earnings through positive comps, higher merchandise margin, and productivity gains, he added. All right, so as we stated, we want to look at this level of interest on the daily chart. Again, this is the 13 simple weekly moving average, and it's at 160. Again, prices are at $55 higher. All right, so this is the daily chart, and as you can see, prices are way above all the moving averages. You had this pump in price, and this is Friday's candle. Red because folks were taking some profits heading into the weekend. Now this is what I call the candle in control. I'm going to highlight that. Let's just do this by and what this means is that you have the subsequent candle, in this case Friday's candle, in between the high and low, in between the high and the low of Thursday's candle. All right, so this remains the candle control, meaning if we see closes below the low of this Thursday candle, prices are going to tend to move lower. However, if you see at some point prices and candles close above the high of this candle, typically prices tend to drift higher. So your critical levels right now is at 223 and 209. I anticipate this week coming, we're going to see either a breakdown or move higher, and that's going to give us clues as to where prices are heading next. Again, a drift down. Look at this 180 level. Not in love with the price action. However, this is the gap higher, so there is an imbalance between buyers and sellers. And so again, you drift higher, prices may want to try to close that gap, but this is a level, strong level to keep on your charts to potentially go long. Thanks for watching. Subscribe. Please like the video.